Listen, we know it's hot out there in these streets.
It is.
Some of us don't have enough money. Some of us are trying to figure out what to do with our money. And the buzzword, you cannot turn on a single financial source without hearing interest rates. They're climbing. And they were actually just raised again last week to the highest level in more than two decades. I remember being a kid and being like, interest rates, that's not going to affect me one day. Yeah, wait till you're divorced. And you're paying all sorts of stuff.
Yeah, we'll get you a spoon or something to console you. Now.
Yeah.
Okay, I'll be honest. This makes it tough for anyone who has debt, but it's not all bad news. Okay, guys, we're going to help you out. There's still ways you can actually benefit from higher interest rates. Interesting. Ooh. And here to tell us how to do just that is this girl.
Yeah.
New York Times best-selling author, founder of Money News Network, and host of the daily podcast, Money Rehab, Nicole Lapin. Welcome to New York Living. Mwah. We're so happy that you're here. Help us.
Everyone's best girlfriend
I know, really.
that they want or they should have. I've got two best girlfriends here. Okay.
I got you.
Interest rates are bananas. Okay,
and so bananas.
Right. So you're thinking, all right, I want to buy a home. I'm going to lease a car. How am I going to do this? But there is a silver lining.
There is, because when interest rates are high, it sucks if you're borrowing, right? Or if you're getting a business loan, but it's awesome if you're a saver. And right now, rates on savings accounts are really high because interest rates are high. Yeah. So regular savings accounts are still lagging a little bit. They're under 1%, which is not ideal, but high yield savings accounts are around 4%, which is awesome. And you're probably like, that's not that much of a difference. Well, if you do it over 10 years, it makes a lot of difference. That beautiful force of compound interest. If you put like $5,000 in a regular savings account, after 10 years, you get $25.
25.
Look at you. Okay, I'm just. Why don't you do the segment, math genius?
I've been following you enough.
But then, if you put it in a high yield, it's $2,000.
That's right.
Okay, so high yield.
So in layman's terms,
yes, please.
Your regular checking account, like the stuff that you withdraw every day to pay your bills, to pay your cell phone, your rent, your all of this.
Everything.
That's not good. That's the interest rate is not that's money that's already being paid for. We're talking about a separate savings account that we're not going to touch.
But not a regular savings account.
It's going to be there, high yielding.
I love you.
Okay, it's starting to make
sense.
Get
it, Mama.
So, all right, we know that it's old school. But talk to us about CDs, and we're not talking about compact discs.
Shout out to Mary J. Blige. What's the 411?
Shout out to the boom boxes out there that are still alive. It's literally a certificate of deposit. You get one at the bank, so please elaborate.
So CDs at the bank are basically like IOUs. You give the bank some money, they keep it for a period of time, and then for the privilege of using your money for whatever, they give it back to you with interest.
Oh my goodness.
And for right now, 18-month CDs are around 5%.
Wow.
Which is awesome.
Whoa.
Take advantage.
Do you know, and what is the rate in which, like, is it a $5 CD? Is it a $500 CD? Do we need to ask our bank institutions what they need?
Well, you can put as much as you want in there. If you have extra money from a tax refund, let's say.
Oh, yeah. I don't.
Or
or
some other money, just needing a home. It's a good place to look right now.
Okay.
Now, sister.
But is there anybody specifically who should be more interested into looking into a CD, or
people that like money?
If you like money.
Extra money.
I think about my parents are having this discussion right now, and obviously they're older than I am, so I'm like, is this something I should be thinking about?
Yes.
Anybody should be thinking about
Totally.
this. Okay.
You can also look at bonds, and those are basically IOUs issued by the government. So that's where you lend the government money. They do other things with it, and then they give it back to you after a certain period of time with interest. And for bonds, you can get lower durations for higher interest rates right now. So less than 1 year, and you'll still get about 5%.
So savers are thriving in this interest rate current state of being.
And I think the other thing, too, is when I was in my 20s, it never occurred to me that I could go talk to someone at the bank. I was just like, oh, that's a lot of numbers.
They're just there for decoration. No, they're there to help you.
But to be fair, the online banks are giving more interest because think about it, they don't have as much overhead. They don't have to, give you pens or mints or whatever.
Hand sanitizer.
So then they give you more in interest, which I appreciate.
I appreciate that too.
Now, the next question is very interesting because like I was just saying, I'm going to be exposed as being dumb in this segment because I am
Ladies.
inept when it comes to talking about this. But
No.
there are ways to help people like me who are having a hard time digesting all of this, and AI factors into that somehow.
Yeah.
It absolutely does. And stop talking about my friend like that. You really
I know.
can't.
I'm gonna pinch you every time you say
no,
that.
you're doing great. We're all doing great. AI is awesome, though. Don't be scared of AI.
Yes.
We're already using AI, right? If you're typing and you're sending a message and it auto-populates, that's
God.
AI.
That's AI.
Okay.
You know, Siri, Alexa, that's AI. So we're using AI already. And for investments, what I love about it is it takes the emotion out. So, you know, we know in theory, buy low, sell high, but when the market is in the pooper, you're like, get me out of here. I'm done. There's no more buying. And when the market's high, you want to ride that momentum and put more money into it. And so AI helps take that emotion out, which we all need a little bit
gosh.
more
I
of.
need
It's
AI.
more
very
steady. Like I
important.
like Magnify the app with an I, and it's basically an AI-powered money assistant. We all need a money assistant
need
in
an
our
assistant
lives.
and
We
a
all
money
need
assistant.
a Nicole Lapin and a money assistant. Unbelievable.
Thank you
got you,
for
girl.
helping us
Thank you.
stomach, digest, and make money palatable.
But I'm not coming back unless you say you're good with money.
I am excellent with money.
There you go.
Look at this manifestation.
Thank you so much for joining us.
Thank you.
A wealth of knowledge. If you want to follow Nicole for more money tips, you can check her out on Instagram at Nicole Lapin. Read her book.
Read her book.
The podcast. She's an endless,
She's
endless
everywhere.
fountain
She's your
of
friend. She's
information.
here to help. That's right.